Trainium 3 is not going to do well. I think that they will not succeed. Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharan.
Greetings, programs. I am Jay Goldberg.
All right, on topic this week, since we said we were going to do it last week, but we didn't because of AMD's earnings, they had their financial analyst day. It was all of the rage, some ups and some downs. It was very curious, the during take of people that were tweeting and then kind of what happened after the day. So let's get into all of that. You were there, so I'll let you start, and then I have a couple of ads I thought were interesting. So what was your take at the AMD FA day in person?
So I've been to New York twice since we recorded last, so I'm a little wobbly here. But AMD Analyst Day, I thought was it entirely depends on your point of reference. If you look at the event as this is a normal company operating in normal times, it was incredible. Like, they're just like, here's our roadmap. We've been executing like clockwork for years. This is our roadmap to keep doing that into the future. Here's our model. Here's all the things we're doing. And right, very solid execution. If you're looking at it from the AI god is imminent, all bow down, then it kind of was like, meh. Right, it was just right, and so for me, as a fan of Lisa Su, I think is one of the best CEOs in semiconductors. I thought it was just a very solid display of this is a company, a normal company, executing really well.
Yeah.
It did not live up to AI hype, and I think that was what caused the disconnect in the market.
Yeah, I mean, I think the couple of things that stood out to me was it was nice to see, them sort of formalize what we've been talking about just general purpose data center CPU TAM growth. I think, they were looking at saying, this market could double, which is great if you think CPUs are in the 20 to 25 billion, range a year, going to 40 or even higher, as I've seen in some estimates. Like, that's not bad. Like, that growth is good. And again, if it wasn't in this AI era, you'd look at that and you'd say, this is great. Like, you guys are in a category, you're poised to take share. All of the points you made about why is great, but that's, what, 7-8%, right? CPU growth over the next 5 years, which is, again, not bad, but fine. People want the flashy trillions of dollars in 2030 are up for grabs for us. And Lisa, did share some pretty aggressive projections, which I'll be curious which you thought about, which, to be honest with you, I come at this two ways. All right. No disrespect to Jensen, but we all know Jensen can be very, very optimistic. And, when he gives numbers, I always find it interesting. Like we debated, right, a few months ago when he came out and he was like, oh yeah, capex is going to be $4 trillion in 2030. I was talking to investors and I was like, guys, like, what do you think about this? They're like, well, he can say that, but we don't really believe him. And I'm like,
Right.
but the dude's saying it. Like, I will say, I don't, like, I've known Lisa for a long time and she does not do things like that lightly. So for whatever it's worth, she's typically very conservative. For her to come out and say some of the TAM numbers, right, that they're seeing, that semiconductor TAM will be $1 trillion in 2030, which, for everyone's point of reference, the entirety of the semiconductor industry was forecast to be $1 trillion in 2030. Now people are saying AI alone, AI infrastructure, so that's networking, right, GPU. So that's bigger than most people, which I'm not terribly uncomfortable with that anymore. Fine. Semiconductor growth is accelerating. The people who do total market semis, fine. But my take is for Lisa to come out and say something like that. Like, I personally hold that with a little bit more weight because
Right.
she typically doesn't
Right.
do things like that. She's very conservative. So for whatever that's worth, I take that as a little. But similarly, I was having this conversation with investors, and they're like, I mean, great, but we're not sold. Like, we're not sold that that's going to happen. And I'm again, I have no problem with this. It just, it blows my mind, Jay, that public company CEOs can come out and say something like that, and everybody's like, maybe, probably not. Not sure if we believe them. I don't know. Maybe I'm delusional, and I just feel like their words should carry more weight in what feels like a material statement. But I could be wrong.
I'm just thinking it's like on the one hand, right? Oh, we know Lisa is telling us the truth. Sell, right? On the other hand, it's like, oh yeah, Jensen's totally lying to us. Let's buy the stock.
Yeah, right, exactly. No, but okay. So anyway, that's kind of where I feel oddly, weirded out by all of that to say. It does seem, and to your point about like what I think people wanted to hear, I think people wanted to see, that they would have a stronger growth. Like, no, I don't think anybody disagrees. They're going to get a good portion of this, right, of this number. They're basically telling you, right, they're going to make north of $100 billion around the 2030 time frame. That's great. I mean, think about that, right? There was a day, I'm sure you remember, AMD used to make $6 billion a year. Like, I remember those days. I remember, like, we worked with them and talking with management. Like, we're going to try to manage out of this, but we've got to be smart with cash. Like, 6 billion to 7 billion, like, is our, and now we're talking about they're making 9 to 10 billion a quarter, right? And that they're projecting they're going to be $100 billion north of revenue in 2030. Like, that's staggering, but that's so different than, right, the Nvidias of the world that, people are talking about, 300, 400, maybe $500 billion, right, of annual revenue. It's just a stark difference, right? So I think that's the thing, and I think people did hope they would talk a little bit more about a new customer, which none of us expected. But I thought they were hoping something like, a new customer announcement, tied to their where they're going with Helios. But to our preamble, right? The stock point, it was like it went down as Lisa was talking, and then it kind of went back up a little bit.
Yeah.
And then it sat there, and then after hours it went up a little bit, but then the very next day it was up like 8% at one point. And I'm like, so what happened? Did people like just need to marinate on this for a little bit? Like, Jensen comes out and goes, dude, we're gonna sell like 20 million GPUs between now and next year, and the stock goes crazy. Lisa gives some insane number, which, as I just pointed out, coming from Lisa Su, should be not, should carry some weight, and the stock fluctuates, and then the next day people are finally like, hey, maybe that makes some sense. Like, let's make this. It's just so interesting to me how those dynamics play out. But I digress.
Yeah, I can't explain any of the price action. It confused me. I will say, just mathematically, the issue I had was they talked about the market growing to $1 billion.
Yeah.
Sorry, $1 trillion.
$1 trillion. Yeah.
$1 million.
$1 trillion.
$1 trillion. And then they also forecasted at the same time their revenue would grow to $100 billion, which, to your point, is a huge number. Yes. But then you do the math on that, and that's like 10%.
Right.
Of all data center electronics. So it includes CPUs.
Yeah.
Right? And it includes memory. So their actual share...
And some AI networking, right? Yes.
No, she specifically said it didn't include networking.
Okay.
Because they don't sell networking. I'll come back to that in a second. But so what she's effectively forecasting is the Instinct line, the MI series, is going to have single-digit share. So she's forecasting no share growth over the next 5 years, which is a little, disappointing.
Yeah.
Right? Now, something occurred to me as they were talking about it, because when she put out that $1 trillion TAM number, right? We haven't talked about TAM in a while. Like, everybody got kind of tired of talking about TAM. But it occurred to me in the way that they were speaking about it is that they are thinking about TAM the way that a planning team thinks about TAM. I've done these exercises before. You sit down and you plan out what's the total addressable market, what are all the products that we could possibly sell, and then you figure out the SAM, the customers we could actually go after with the products we have, and then there's the market share, or SOM, right? And they're clearly going through that traditional exercise. That's the way chip companies have done this for years. As opposed to other people, like Jensen, who are using TAM numbers in a very different way. They're trying to paint a big economic picture, or I don't know what, something else. And I think they're just I can so I'm I was what I was trying what I eventually like the more they talked about it, the more I could sort of like back into their thinking about all this, and like the process they went through to build the model that went into those numbers, because they get a lot of scrutiny about this, right? They once she started talking about TAM, I started getting like all kinds of people
Right.
emailing me asking me
You
to
try to
ask,
back into it. Absolutely.
right? Everybody
Same
cares
thing.
about this TAM, and so I think they revealed sort of their process for building out the TAM, and I'm sure that there is somebody inside AMD, is probably a team of people who have combed through that and actually given really hard thought to exactly what numbers to use. And they're like, well, what market share should we forecast for ourselves? Let's be conservative. Let's put in 5%.
Yeah.
And I think
Agreed.
that's exactly how they got there.
So and I think all of that again to say, I think there's optimism for Instinct. I think there's, really the concern, which I saw kind of get posted up in a lot of notes, was, one, some of the stuff that you said, which was, right, if you just look at the growth and sure, going from, call it 7 billion to 8 billion this year to north of 20 in 2 years, like that's great, but you're not growing the same pace with the market, which is what I think people see these dollars, right, to come and happen. So I think that's a fair critique, but I really think what needs to be established here for people to really buy into this upside is really the slice of the market that really fits for AMD, because I feel like people think that as good as Helios is, they'll just remain crowded out between hyperscaler custom ASICs, and then I want to come back to that point with a thesis, one of my game theory thesis in a second, and or just where NVIDIA is going, right? Because if you just look at most people's forecasts, and I get it, forecast to forecast, we're just making crap up and throwing stuff on a dart. You've got, GPUs largely 90% NVIDIA at somewhere between 65 to 70% of that market, and the rest to custom ASICs. So you look at that and you're like, man, where can you really fit? So that's, I think, the real critique. But I think if they can figure this out and make a case, right, that customers are progressively moving workloads to AMD, and or that hyperscalers do want to diversify in some capacity, then I think that's doable. So, but for my game theory, I think. Okay, and remember, when we say game theory, we're just basically throwing out like all sorts of different scenarios, right? We scenario plan left and right, and we just have these interesting scenarios. But one of mine is that Trainium 3 is not going to do well. I think that they will not succeed. Sorry, this is my game theory, and I'm just throwing this out. So in this theory, Amazon does not succeed in getting third-party CSP workloads, which is what's required here. Trainium can do fine for Amazon workloads if it's built and optimized for that. It is, however, a challenge to continue to scale that program and lose cloud customers if your cloud customers are moving to things like Google because of their amazing TPUs, and Microsoft because they are the leader in GPU installed base, and you, Amazon, are not getting workloads. If Trainium does not work to get third-party CSPs, they will have a hard time playing catch-up with GPUs unless they go to AMD. And I think you could make a case that Amazon could optimize the same way that they thought Trainium. They could optimize what they do in their stack with their AI software, with Bedrock, with things that they own, to make it turnkey for enterprises who come there that really don't care whether they're GPUs or not. They just need a place to run their AI software and their AI workloads. And that may include some degree of Anthropic. But my sort of game theory is that in order to play catch up, if Trainium 3 doesn't pan out, AMD is going to be right there, and I think they're a great fit for Amazon to do much more custom work with, and that could be a pretty significant scale win. So there's my game theory.
So I've worked on a similar theory. I think what's taking place at a high level is the traditional hyperscalers, the traditional internet giants, are getting lower allocation from NVIDIA than they would
absolutely.
Like. And
with
right?
Maybe the exception of Microsoft, but yes, absolutely.
Right. And I think that's a deliberate strategy on NVIDIA's
Agreed.
part.
Agreed.
all of them now are in the position of they don't want to become dependent on NVIDIA. They're very worried about that strategically. Plus, they would just like more compute. They're all going to push their own internal silicon, their custom silicon, next year. I think everybody's launching some version of silicon next year. And they, at some level, recognize that that is a risky proposition and it may fail. And so they're all throwing a little bit of money at AMD as plan B, as the backup plan, or plan C. So they buy as much NVIDIA as they can. Plan B is do their custom stuff. And then plan C is keep AMD in the game.
Yep.
And I think you're exactly right. I think all the hyperscalers are going to do their own silicon. Some of them will fail. I don't know which ones at this point. Maybe it's Trainium. That certainly seems possible, but
right. I can guarantee you it's not Google at this point. I think GPUs are set as a success. Everybody else, question mark.
Everyone else is a question mark, right? And so I think what will happen is some of those will work and some of those will fail. And the ones that fail will then turn to AMD.
Yep.
And AMD is signaling that they are very much in the game. And I think one of the most impressive or significant parts of their Analyst Day is they gave us more information on MI500, which is, what, right. 2027? 28?
27.
27, yeah. Yeah, so it's 2027, right? And they showed some numbers, and I will tell you, I think it looks really competitive with NVIDIA. And if you think about the sort of competitive landscape, to compete with NVIDIA, you need a performant GPU. Okay, they have that. Then you need a rack level, a server design and a rack level design. AMD has that through ZT Systems. That's for the server. Then you need the rack, the network rack, the scaled up rack. That's Helios. That's coming next year. And then you need software, right? So they have the server, they have the rack, and then right. They will their software ROCm it still lags CUDA, but like that gap has shrunk considerably in the last 12 months. And so I think that where I'm getting to is that positions them incredibly well against NVIDIA in the 27, 28 timeframe. And you just look at it raw, and like suddenly they'll have a really, really competitive offering. Now, NVIDIA is not standing still. NVIDIA is doing still super far ahead in lots of areas. They still have real networking. AMD doesn't have networking, and so they're very much dependent on all the flavors of Ethernet coming out. But I think that's how this giant chess game plays out. Is next year is the year of custom silicon. Everyone tries. We'll know pretty quickly who's real and who's not, and then 27 we have NVIDIA with AMD with a really strong lineup, and that's it's a different game then.
Yeah, agreed. And that's why, again, I feel like, I've been to AWS summits really since the beginning of this Gen AI thing and had lengthy conversations with them about, what they try to do with Bedrock, what they've tried to do with agent automation and just making it turnkey, and to them, there's a world where, and I think this is personally entirely reasonable at some point, not today, where, they don't want you, small enterprise or large enterprise, right? Somebody who's not in that kind of 500 world who does so much of this software on their own, right? But everybody else who wants a turnkey solution, they want you to just bring your workloads and then their software will determine where it goes. And the issue for that is, like I said, if Trainium just doesn't perform to the way that they need, so that's a strategic deficit for a customer to run it on Trainium, right? It's not competitive, it's not quick, maybe it's cost effective, but it's not performant or something like that. In their vision, they could make it agnostic, and so AMD's right there, right, as a great option for both inference and to some degree training, but I would say largely for inference, which is something I also want to add on to this in a minute. But because they seem like the one company who's just trying to make the easy button for AI versus what Microsoft and Google want to do, where there is a lot more work, at least today, in bringing your workloads to that infrastructure because of who you're tying into, right, on a back end, whether that's a frontier lab or something else. So that's why I just think it fits. AMD as a round out actually fits Amazon's strategy really, really well. And that's why, like I said, one of my game theories is they turn to AMD, and that could be a huge win. Now, to inference, there's a couple things I learned in my hobby power utilities analyst few months it's been, tracking the gigawatts. So when you build a training data center, these are the ones that need to be 5, 6, 800 megawatts to a gigawatt, right? Because they're just much heavier workloads. These can be anywhere. These can be what you're seeing go on in Texas or Virginia or Oklahoma or the Dakotas now, like crazy places where they're building these things just because they need land, power, pricing, etc. There's going to be a shift that happens when you start building out inference data center nodes. These don't need to be as big. These can be anywhere from 10 to 15 megawatts, but they need to be close to cities for latency reasons. And that includes not just what we're talking LLM, that's for autonomy, that will be for robotics, right, over the next decade plus. And all of that makes me feel like we're on the cusp of seeing fragmentation in product lineups from training SKUs to inference specific SKUs. And I think you already see this if you track supply chain with Google TPUs, where it's not just one TPU. It might be a performant TPU, or as they say, a V7E or a V7P or whatnot, right? That there are inference ASICs they're making and then training ASICs that they're making. So for example, we don't see today from NVIDIA a training ASIC, right? Or a training GPU. An inference GPU. They say, sure, you can do both. You do training and inference, but it's not dedicated to inference. Meaning, again, right, you can stack a bunch of these in 10 megawatts versus you need to stack a bunch of these in a gigawatt. And so I'm intrigued by, just from an AMD point, starting to move these to much more power efficient training SKUs, which Helios, yes, I get can be that, but you see where I'm going with this, that you actually have a product line that's dedicated for training that will go and scale at the possibly thousands of these 10 to 15, maybe 20 megawatt data centers. But they're not going to be, as anywhere near as power hungry as those training racks. Now, we're not there yet, but this is something you hear everybody talking about data centers on the horizon. It is going to be coming when they start speccing out these basically inference focused data centers versus training, which is what you're seeing built right now, right? In these 800 to a gigawatt or larger data centers. So I think that will be an interesting shift. And then again, open up a lot more SKUs from a product standpoint. That's not just kind of the one rack. It's, what do you want? Is it an inference or is it training? Maybe a mix of both. But I think that changes the product roadmap landscape once we get to that cycle.
I think we're further along that track, but I agree. I agree with your basic premise is when we get to inference, a lot of this could change in possibly in some unpredictable ways. I think NVIDIA does not necessarily have a lock on inference. They say that they do, but I don't think that's guaranteed. They just have a first mover advantage, and they do have. Remember, they launched Rubin CPX, or they announced it. That's essentially an inference system, and we talked about this like a year ago. We made a prediction that they were going to do an inference-focused low-end accelerator GPU. That's essentially what CPX is. I agree we're heading in that direction. I would quibble a little bit on timing, and I think there's more inference going on already, but certainly this is the big question. And in my mind, one of the things I've been sort of toying around with is, for years we've said, training is important now, but ultimately inference is going to be a much, much bigger market. And we've been saying that for 3 years, and we still haven't gotten there. There is a healthy amount of inference going on, but I don't think it's 5x bigger than training like all the forecasts say it will be.
Sure, right. I'm just saying, if you look at this from from again the perspective of where everybody's looking at this today, and we've had this conversation of like tracking the gigawatts, we're going to run out of gigawatts. Yes, you're going to run out of gigawatts when you're talking about 20,000, 2 or 3 kilowatt racks. Like that's a lot, right? Or 1,000 kilowatt racks. That's a lot of power. Inference doesn't need that same thing. And my only point is just fragmentation in the offerings, right? NVIDIA will probably make a inference dedicated product that's just for inference at some point in time and offer that for this types of scale. But the other point I just want to cement with this, and this is a broader point, not just about these. When you look at what's happening at the ground level, like most of the data centers for the CSPs and whatnot are not ripping out their existing capacity or old data centers to just retrofit and put in a bunch of these GPUs. So when you look at where is the kind of AI workloads and whatnot going to run, like this is where the greenfield growth comes in, which is the main reason why I started like looking at who's building what where, and how much capacity does that have in gigawatts, because you're going to fill those new builds with GPUs. You're not like bringing all those racks and tearing up existing infrastructure, because you have to keep supplying all of your cloud native customers, like we've talked about before, with that infrastructure. So this is where I sort of come back to like, it's a build out phase to the degree that we overbuild capacity of GPUs, there's a bubble, whatnot, but the build out phase being where almost all of these new GPUs are going, that they're going to buy from AMD and NVIDIA, and maybe even to some degree, right, their custom ASICs. Like Google has this deal with FluidStack where they're just building an additional data center for TPU only there for workloads. This greenfield growth is where all these are going, right? So that's why you're going to look to build capacity 10, 20, 30 gigawatts right over the next couple of years. That's where all the GPUs are going, right? Not necessarily retrofit in existing infrastructure. So I look at it also as where are all these going to go in greenfield growth, and that kind of shows you how much growth there is ahead, because you got to fill all these data centers of gigawatts you're securing with AI compute infrastructure.
Yeah, I agree.
All right. Let's move from that and now have a slightly more controversial conversation. Controversial because I'm going to make it controversial. I don't know if you were planning on it, but I'm going to do that. All right. The Neocloud, you'll know where I'm going based on a question I asked you the other day in our thread. Neoclouds, let's talk about the earnings. So it was Nebius, IREN, I'm going to blank on
CoreWeave.
Like, CoreWeave. Yes,
White
CoreWeave.
Fiber.
White Fiber. I think TeraWolf was in there, but I could be remaining because I'm not. Yeah. Anyway, we had the Neoclouds earnings. It all looked great, even though CoreWeave took an absolute dump. In fact, they're all taking a dump today when you just look at their stocks. I'll let you start, and then I'm going to make my controversial point. So, what was the takeaway? What was your takeaway?
So, we had a whole bunch of the public Neoclouds report last week, and I think the headline for all of them, or at least most of them, was identical. They reported a quarter that was somewhere between not great and just fine.
Yep.
And then they all guided down Q4, which disappointed everybody. And they all said the exact same thing: is we're guiding down Q4 because we just can't get capacity online fast enough. Right. That's the headline. When you start to dig into them individually, they all had a pretty diverse array of explanations of what was going on and outlooks. But, the headline, mech quarter, bad guide, can't bring things online fast enough. And that's like 99% of what people are going to read. And so the stocks are all getting whacked this week.
Sporked. Yep.
But I don't know. It was not a great week for them. And so
I think go ahead.
I will say, like, CoreWeave in particular, I think it was the worst hit. And
I agree.
What they said was they had one site that they couldn't take delivery of.
Right.
And a lot of people
vendor, because their vendor,
but
their
here's,
data center partner.
Well, yeah. So here's the thing: a lot of people, myself included, misinterpreted that initially as being, oh, that means they just couldn't get, like, somebody couldn't deliver cables or transformers or something. But it wasn't that. It was the actual landlord of the data center couldn't hand over the powered shell. Right? Sometime this quarter, somebody at one of their sites was supposed to, give them a powered up building with live electricity. And that didn't happen. And they got asked this question a million times on the call: what exactly is it going to take? And They didn't say, but they assured everybody that the center would come online in Q1 or maybe Q2. And I will say there's this sort of truism, the saying on Wall Street, which is there's no such thing as a 1 quarter problem, right? And in CoreWeave's case, it was really interesting because there's a weird mathematical accounting thing where they guided down their revenue miss for Q4 was pretty minor. It was like $40-50 million. It was like single digit % miss, pretty blasé. But they also guided down CapEx by 40%, right? So that's because you have all this upfront CapEx. They're basically making the first payment on the building. So their CapEx was way down. And they said all of that, the revenue and the CapEx will come on stream in Q1 or Q2. They got a little hedgy about that, right? The last thing I want to just add is there was another interesting is Nebius reported. Nebius had last month gotten a giant order from Microsoft. On their call, they announced another deal with Facebook that was smaller than people expected. It was only $3 billion, and people were kind of hoping for more. And they said it would have been bigger, but we didn't have capacity. And they also said they're raising their CapEx guidance. They were originally going to spend $2 billion next year. Now they say they're going to spend like $5 billion. So pretty big increase. CoreWeave, by contrast, they raised their CapEx forecast for next year, but they only raised it by the amount that they missed in Q4. So they essentially held CapEx unchanged for next year, which also, I think, caused people to wonder, well, if you have so much demand, why is your CapEx steady? Everyone else is raising CapEx. Why is your CapEx not going up more next year? Because their backlog of business, their pipeline was up, I think, 50% on the quarter. It was a huge, huge growth in pipeline, which is a good sign.
Yeah, exactly.
But, why aren't they going to spend more?
Yep. All right. So the positive with this whole thing was all of them continued to indicate backlog and robust demand. I mean, I didn't expect anybody to be like, oh no, we're freaking out. We're not getting demand. Even CoreWeave was like, we're still seeing a lot of demand for H100s, which we know, we see this too in any of the tracking, right? You can just go look and they are a preferred provider for workloads. My issue is all of the demand, and I will throw CoreWeave into this, although I'm sure this will ruffle some feathers, which is also where I'm going why it's controversial. I do get that they have startups in the Frontier Lab area as customers, but most of their customers, for all these names we're talking about, are the hyperscalers. And I still, to be honest with you, and I am working my own thesis, both sides of this. One, is what I'm about to say true? Two, where is it not true? I'm unclear if any of these names we're talking about, and unfortunately I'm going to put CoreWeave into this, like I said, to ruffle some feathers, if these guys are not just REITs and not Neoclouds. Because they are essentially largely infrastructure landlords, the term that you and I have used before, for the hyperscalers. And to be honest with you, Jay, this is my concern. Does anybody really believe, for CoreWeave, that they are going to go and get F500 enterprises to run their workloads there? Even F1000, even the small banks, I don't know. Are they going to get third-party workloads who are not coming to them from Amazon or Microsoft or Google or whoever they do deals with? And I personally don't know the answer to that. But right now, my gut is no. If anybody could do some of that, yes, it's CoreWeave. The other ones, I have no hope. No chance.
So, yeah, I mean, I it touches my heart to hear you say that, because for a year now, I've been thinking the same thing. I've just been a little too polite to say it. But the knock on the Neoclouds is that they're just REITs. And REITs trade at a very different valuation than Neoclouds, right?
Yep.
But here, let me offer the other side of this. Okay. I think there is more differentiation. There's some differentiation. I'm not gonna belabor this because it's a tough one. But there's a pretty reasonable argument that CoreWeave actually has a capability that is different than everyone else, right? They can do InfiniBand networking better than anybody else, arguably better than NVIDIA itself. That's why they are where they are. It's not just first mover advantage. They can do InfiniBand networking better than everyone else, and that is incredibly important for getting really efficient workloads done, right? Significant savings built into the networking of all these big training systems. Now, offsetting that is, 70% of their revenue comes from 3 customers. Or it's a little bit less than that. They actually diversified a little bit this quarter. But if you add up Microsoft plus OpenAI, because all the Microsoft stuff is for OpenAI too, it is still pretty highly, concentrated. Their backlog is much better, is much more diversified. So there is an argument there, and I'll tell you, one of the things that I always thought was interesting about Nebius in particular is, until they had this Microsoft deal, mostly what they were talking about was exactly what you're saying. Is they're just building a cloud computing business for Fortune 500, Fortune 5000 companies, and they have a few. They're right, and it's there are reasons to go with Nebius. They were in this business for a long time. When they were part of Yandex, they were cloud. They have CPU compute and GPU compute. They were a solid tier 2 competitor to AWS and Azure back in the CPU days, and now they're adding GPUs, and they have, you can make this argument that they actually have a business plan around a broader set of customers. Yeah. Now, the problem they face is they just got this massive $16-17 billion Microsoft deal, which really distorts things. And I don't know. I don't know how this all plays out. One of the things that occurred to me when Nebius won this big Microsoft deal, it occurred to me that when I start to look at the company and analyze it, I think what's going to end up happening is people are going to treat the Microsoft revenue stream different than the other side of the business, right? And it's going to be almost impossible to tease that out. But the value, the long-term value of having a massive customer like Microsoft for any of these neoclouds it's lots of money upfront now, but how sustainable is it, right? You've tweeted about this. We've all been saying this for years. Is Microsoft or any of the other hyperscalers does not want to go through the neoclouds. They want to own this all themselves, and they can't, because they can't get enough GPUs and they can't get enough electricity right now. But at some point, they will be able to get those things, and then the question is, what will they do to these? Will they renew these big contracts? And that's a huge open question, and nobody knows.
So my concern, and again, I would like to be proven wrong to a degree, but really what I would like is a well-articulated argument that CoreWeave, who again is the only one I'm willing to say I think could have a chance at the being not an infrastructure landlord for the big hyperscalers, why customers are going to come to them and not AWS and not GCP and not Azure. Like what are they going to choose specifically to deploy at scale that those 3 big hyperscalers don't have? So that's the question. But bigger point to me is, if you just look at CoreWeave's capacity in wattage, right, that's planned, the hyperscalers will take all of that. So like they don't even have capacity, because they're not building 10, 20, 30 gigawatts, right? They're building 2+ on that's planned. Like your hyperscaler tenants will take all of that. So they don't even have room for anybody else, which again is why, well, I will tell you the other reason why they're not technically a REIT. A REIT is actually the company who let them down, unfortunately, who is Core Scientific, in building that shell. That company trades like a REIT because all they do is build colo facilities, very similar to Equinix and Digital Reality Labs. But they're middlemen-ish, even though they are building the debt side. But my point is, I don't see them having the capacity for anybody else but those 3 customers. And that's concerning because, again, you got to have compute capacity to go and get additional customers. This is what Google's building, and Microsoft and Amazon, where they're looking to add 15 to 20 gigawatts per hyperscaler in capacity. So that's my other concern. But this, I throw this out as my controversial point, which are these neoclouds REITs, or are they actually neoclouds on the basis of becoming a true third party customer or third party host for businesses alike? And I really wrestle with this, and to be honest with you, am yet to see a well articulated answer why any of them are going to go get workloads from the hyperscalers.
Yeah, it's a fair point, and I mean that's you're not alone in this, because it's actually, to me, this is the root of the bubble fears, is all of this, right? I've been on 4 transcontinental trips in the last 8 days, and I spent all that time reading through CoreWeave's debt documents, which, once I say it out loud, sounds completely insane. But there are a lot of documents, and there is a lot going on there, and there's a lot of vulnerabilities built into that. And so you're raising this question, and I know you're sort of thinking about it strategically and, like, from a customer service, customer value proposition standpoint. But there's some pretty deep economic, deep bubble questions sort of tied up to this. And I think at least in part, I think what's taking place right now is, like we were talking about earlier, is NVIDIA has willed these neoclouds into existence. And they are going to, it is in NVIDIA's best interest to keep it that way. NVIDIA would much rather operate in a world in which they have 100 customers who are all small and all struggling to define their value. Much rather have that than have to go back to a world in which there's 3 customers and Google, Amazon, and Microsoft call all the shots. And so, as long as GPU scarcity is what determines the marketplace, I think the neoclouds will continue to exist.
Yep.
Right. As long as NVIDIA has that sort of upper hand.
Which reinforces my point about Amazon maybe and AMD, because you're 100% right, and we've talked about this, as Jensen and NVIDIA are able to make a kingmaker and basically say, we're going to give them the most capacity, with, again, the exception of Microsoft, who, again, is the GPU installed base leader. They're not going to get the same allocation. So that's why I think my Amazon game theory becomes interesting, where, again, like, Microsoft or NVIDIA is going to be happy to say, yeah, I would rather focus on and invest in those companies who will bring workloads to my GPUs. And I want my GPUs out there in all these places where they're basically an NVIDIA shop. And that's what CoreWeave is. And that's what other neoclouds will be, with the exception of the AMD neoclouds, should the tide ever turn in AMD's favor, who will be interesting to watch. But, like I said, this is a conversation I've had with lots of investors on, should these things really just be treated as REITs, and they're managing capacity and infrastructure for the hyperscalers, and that's really their business, versus are they a actual cloud company getting cloud workloads for somebody not named Amazon, Google, or Microsoft. So wait and see, but that's the thesis.
Yeah, I mean, it's a tough problem, because what if you're one of those neoclouds and you're like, I could allocate my capacity, my scarce capacity, to building out this long tail of customers, grinding out $100,000 deals, or I could sign a $16 billion deal with Microsoft, or a $7 billion deal with OpenAI. It's very, very hard to resist that. And so I think there are legitimate concerns about the neoclouds, but I also think there's a whole lot of this build out is dependent on what those guys are doing. And so if you start going down that path, it leads to, it makes me sound optimistic.
Woo! Jay's optimistic.
I'm not optimistic. I'm saying if you're going down that path, you're more pessimistic than me.
True. I am. Honestly, I want this argument made to me about why, they're going to get these customers that aren't natural fits for the hyperscaler. So, all right, well, we'll close on that. Next week, everybody knows the quarterly earnings to end all earnings of NVIDIA is coming, which we will talk about at length. There's also some events going on around Microsoft and others for Ignite and whatnot, which I'm sure will have infrastructure. So we will talk about that. So we appreciate everybody listening, and we will talk to you next week.
Thank you, everybody, for listening. And just so you all know, Ben made this episode, and he's not feeling well. So kudos to him. And, but semiconductors don't feel pain. Semiconductors don't take sick days. So
they don't.
Ben can't either.
They don't. We can't. All right, everybody. Till next week.